let's start off with the first one, and that's Eicher Motors. Delivered a strong growth in the first quarter, just as expected. The continued demand for Royal Enfield bikes helped the matters a lot. Yatin is here, though, to tell us whether he was impressed with the quarter from Eicher Motors and what do brokerages have to say. Yatin, good morning.
Good morning, Neeraj. Not an impressive quarter, but a quarter which was largely stable for the company. Quite predictable on the margin front, on the top line, EBITDA front. So if you look at the revenue growth, that was a stable 27%, in line with expectations. Net profit, however, came in slightly lower because of lower other income and other factors. But if you look at the absolute EBITDA, that came in at 809 crores versus the expectation of 805. And if you look at the EBITDA margins, came in bang in line with the street expectations at 31.8. So in a scenario wherein we had higher commodity cost pressures, raw material cost pressures, Royal Enfield business and the consolidated business has been able to maintain the overall margins for the company. More importantly, we had Eicher Motors take up price hikes on a regular basis, because of which we had some good healthy margins coming in for the quarter. So the operating performance clearly boosted by the Royal Enfield business. Of course, the commercial vehicle business also posted strong profitability. Nearly 100 crores on the bottom line was contributed by that business. That is the key takeaway. Quite stable quarter. And if you look at the brokerage also, most of them have maintained rating, except for Credit Suisse, which has upgraded it to a neutral from underperform rating. Target prices clearly remain in the 38,000 rupees per share kind of a range. More importantly, most of the brokerages believe that from here on they will watch out for the order book for the Royal Enfield business, what kind of a margin that they clock out, and more importantly, given the fact that the market share in large states in India for Eicher Royal Enfield business is quite stable and has been falling. Those are the numbers that they'll be watching out for in terms of predicting the future earnings for the Royal Enfield business, which is the most profitable part for Eicher Motors.
Okay, so that's as far as Eicher individually goes. And yes, those sales clearly boosted Eicher's numbers, but where does Eicher stand amongst some of the other bike manufacturers? That's the key question. And part two of Yatin's piece is about Eicher versus the rest. Yatin, you moved over to the wall, I see.
Yeah, I moved over to the wall and we have some beautiful, graphics coming in. Royal Enfield, Hero, as well as Bajaj. All of these three auto two-wheeler makers have reported their earnings. We'll probably try and put a comparison as to what kind of a volume growth did they post in the first quarter, plus what kind of margin trajectory did they have. So clearly we have Bajaj Auto, which has sped up from a probable weak first quarter last year. We had some good volume growth coming in for Bajaj Auto, which was almost 30% plus for the last 2 quarters, thanks to the strong demand in the domestic market, as well as we had some good tailwinds in the export markets because of higher commodity costs, and most of them were crude exporting countries. What's to be seen is the performance of Hero MotoCorp. They have been quite stable. Whenever there have been festive quarters, they have been able to clock in good volumes. But last quarter, which is Q1 FY19, they posted a 13% kind of a sales volume growth. The trajectory for Hero MotoCorp has been stable, not volatile like like Bajaj Auto, of course. Royal Enfield, 24-25% is the kind of trajectory analysts were working with. They had a new Chennai plant rolling in, post which they had some improvement in the overall volumes. Currently, they posted almost 22.5% growth as far as the Royal Enfield business is concerned. So we are talking about only the two-wheeler business here. Good growth, but clearly analysts are wary of the fact that since the waiting period for Royal Enfield, business has been slowing, probably there could be some slowdown in growth. So that is something the analysts will keep a sharp eye on. But let's come to the margin picture. Clearly, you will see Royal Enfield business, which is the first line on your screen. They have been posting very strong margins for their standalone business, which is the Royal Enfield business. Almost 31.5-32% is the kind of range that they were working with. If you look at the last quarter, 31.8% is what they posted. So the margin trajectory or the margin picture for Royal Enfield has been quite stable versus Hero MotoCorp and Bajaj, wherein there has been volatility. Now, if you look at Bajaj Auto, of course, this is an aberration. Q1 FY18 was an aberration given the fact that we had GST impacts, compensation to dealers, a lot of adjustments happening there. But the trajectory was almost 20% for the last 3-4 quarters. But look at this, what they have done, and probably that is the reason why sharp fall in the stock price came. 17.6% it was posted, because of which we had some talk about how competitiveness is increasing, especially in the 100cc segment. So Bajaj Auto, of course, clearly now on margin will be something that the analyst community will be watching out for. Q1 FY19 was clearly a blunder in terms of the operating performance. Again, Hero MotoCorp has been stable around 16-17% kind of a margin trajectory. Last quarter was slightly weaker. The management blamed weaker margins of the first quarter FY19 on higher raw material costs, which are probably going to subside. They are looking at working with new strategies to aid the overall margin performance. Their Haridwar plant also, the benefits went off. That also had an impact on the overall margins. But clearly, if you look at the auto companies, two things that we'll watch out for in the two-wheeler space. Number one is the volume growth. How does it shape up moving forward? And the operating performance, especially for the likes of Bajaj Auto, given the fact that they have been looking at various price points to aid their overall volumes. And if that hurts margins, market would probably not like it.